is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Welcome to the last day of the month. Remember that the last 2 days of the trading month and the first 2 days of the trading month have the most bullish bias. But remember, that's a statistical thing. It doesn't necessarily happen all the time. It's like everything else in the market. It's all related to probability. The first chart that we're going to look at today here, folks, is the chart of Boeing Airlines. This stock has become the Google of the skies. It is the one that's making the Dow Jones move today. We're up about 60, 70 points in the Dow, all related, about 80% of it is related to the movement in Boeing Airlines. If you'll notice the two gaps that we have here, folks, this is how markets end. They don't begin this way, they end this way. All you have to do is look at the long-term chart on this, and we're in some type of an exhaustion mode, my opinion, of course, but that's just based on some technical analysis. Now, what I usually do is when a stock is this popular and it's got so much impetus behind it, I move down to a 15-minute chart to try to find some expansion patterns that might be an indication of where the market might turn, because when it turns, it's going to turn the S&P 500 and the NASDAQ, which is the weaker of the two, and then of also the IWM, which is also one of the weaker modules. So we want to watch that very closely. Now, I'd like to take a hat off here for when we have Stan Harley on, and he did such a good day the other day. I would like to also have a hats off here for Mr. Norm Winsky, because on the show he came on Thursday, which was the 27th, and he mentioned that on the 28th of July, there was going to be a lot of things happening in the grain market. And if you'll notice here, the November soybeans, which is the new crop soybeans, it had made a perfect 61% retracement as of Friday, and it closed, down below that number by about 5 or 6 cents. And then, of course, last night it gapped down 20 cents. And we have to give him a hats off for that, because he actually, he mentioned it several times on the show and was quite emphatic about it. He said beans, wheat, corn, oats were all in an area where they were going to have a pretty significant change in trend. And if you follow any of these, you'll notice the beans were down 20 cents, wheat was down 15, and corn was down about 8 or 9. So these are the types of things that when we have a guest on and he gives us something really good, we should give him a hats off. Of course, when they're wrong, what we do is we throw vegetables at them. So, Norm, when you're on and you don't do well, get ready to have salad, because they do throw vegetables. Anyway, it's just a matter of probabilities on some of these things, but it does show that there's some relationship here, especially with the grains, with the lunar cycle and also with Mercury. And Norm mentioned several times on Thursday that the month of August has got to be one of the biggest months that we've had in a long time as far as astro things going. We've got two eclipses. We got on the 7th of August, we have a lunar eclipse and a full moon, and then on the 21st of August, we have the big solar eclipse on the new moon that crisscrosses the United States. So this will be a really big one, as Bill Meridian from Cycles Research in Vienna, Austria, also talked about that one quite a bit. So this is what we're looking at today on some of these things we're watching. I would like to bring up one other chart that I keep getting a request for it, but I don't know anything about it, and that is the Bitcoin. I want to put it up here. This comes from one of our friends across the pond, and we'll put it up here to take a look at it here. This thing actually trades trades pretty good. I mean, you can see the patterns that you see here. You have a downtrend, of course, because you've got lower tops. You have that big ABCD pattern that completed down there at the 2,600 level. Is that 2,600 or 26,000? Well, it's just 2,600 now. It'll be 26,000 next year. But anyway, this is some of the patterns that you're looking at. I don't know how you trade this. It's not listed on any major market. But I guess it's on the pink sheets or whatever sheets they use. But this is a very popular item, cryptocurrency, and another invention of the technical age. But it does follow the pattern. Now, what that tells you really is that you've got a market that's got a lot of people involved. You can't get patterns like this without having the public involved, folks, because this is the fear and greed coming in. It just follows these patterns just, really, really good. So watch it very, very closely. Well, now let's get on to when the pedal hits the metal. I have a couple things that I wanted to share with you. One of these comes from a Bank of America, Merrill Lynch. And it came through the Bloomberg terminal, but I wanted to bring this up to let you folks see it because it basically shows the influence of the S&P 500 and the Fed's balance sheet. So you can see what's going on here with the flattening of the Fed's balance sheet in trillions of dollars, and yet the S&P keeps going higher. This is different than what they're telling us, folks. So I don't know what this means, but it's very, very, it's an interesting chart. That's to say the least. But what the Fed is doing is experimental. However, experiments can go both ways, and that's the main thing. I've had a request to take a look at one chart in particular here, and this is the natural gas. Let's just give me 1 second here. I've got to get the right chart up if I can. And I think I can right here. And this is the natural gas because we talked about this. Let me get this up here. There we go. And we'll put this over here. Here we are. You'll see we had the really nice retracement at the 78% retracement. We had that little 5-day rally. And then today we have the big gap down. It started to gap down on Friday, which was your first indication that there was actually something wrong. And then, of course, Sunday night, it really broke apart. And that told you that's what you were looking at. Here's what it looked like as of Friday. You could see the big move down. And that was telling you that there might be a little trouble in River City. When you've got a position on, you really would like to see it close in the direction. Like if you were long here and you saw that ABCD pattern at the 298 level and you close at 292, that's 6 cents below where you wanted to see it. So that's not a good sign. Of course, you have no control over it over the weekend because, the market's closed. And what happens, it gaps down below 287. So this is one of the problems you have is holding a position overnight is because it makes a real interesting thing to look at. Now, we're going to come up to the break. After the break, I'm going to show you the most important chart I think I've ever put up on this radio show that I've been doing for 10 years. It comes from a good friend across the pond. We'll take a quick look at it, of course, but we'll be up for that break. So 877-927-6648.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, I've posted a chart from one of our good friends, actually very, very close family friend, and we visit him every year in the UK, and he's the gentleman that does all the work on sacred geometry and gematria and stuff that I've mentioned here many times. This is his chart of the S&P 500 that he's had for months. I believe he sent it to me the first time on March 1st, and that was right after we had, or right before we had seen him in May. So it's very interesting, you know, that it's finally got up to this level of where we are right now. Whether the symmetry here is going to prevail, we'll have to wait and see, but it's interesting here because it does have all the elements that I look at, you know, the ABCD and the expansion numbers, and of course the patterns and the geometry and stuff. So that's why I'm posting it here to let you folks, take a look at it to see if it does work. Now, we've mentioned here that the Bradley model has been off by a couple weeks, but folks, the Bradley model in 1987 was doing similar to what it's doing now. In other words, it was off by, I think, a couple of weeks also, but the actual trend that was coming in 1987 turned out to be the right thing. And as you can see here with the Dow Jones industrial average laid over the Bradley model, you'll see that the Bradley model starting in early August, and we're very close to early August, is heading down until the 16th of October. And of course, that's within 3 days of the anniversary date of the 1987 crash. Whether this is going to be a crash or not, I don't know, but all the things are set up for it for sure. The difference is in 1987, folks, we didn't have ETFs. We had derivatives, of course, which futures are derivatives of, certain things. But now we have derivatives of derivatives of derivatives. Plus, we have all this off-market stuff that is really hard to understand. So there's a really big deal about the liquidity that we have going on here, and then also the volume. The volume in stocks, over the past 4 or 5 years has dropped a great deal. There's not a lot of, most of the stock, there's some, not most of it, but some of the stock increases in these individual issues is coming because they buy back their stock. Well, why not? They can buy back the stock at a very, very cheap price, considering interest rates are zero or pretty much to zero. So that adds to the fuel to the fire. So it is a little bit of a different situation than we have as normal. Now, I wanted to talk just a little bit about high-frequency trading and algorithmic trading, because this brings into situations where we have these flash crashes. Because if you have an illiquid market and these people try to, put their positions on, remember that once you have a position on and the market drops on no volume, you're still making money. Because on the other side of this, it's very, very powerful to see these things move. So we have to be prepared for high-frequency trading and algorithmic trading. And folks, the only thing that you can do to protect yourself for this, because you don't know what the future is going to bring, you've got to find a place to say, okay, maybe I'm going to be really wrong here, but I've got to put a stop in and say, bada bing, bada boom, I'm out of here. Because you don't want to see something like what happened, back in 1998. We had it again, just a few years ago. But they do happen. But the trouble is that they're rare. And that's the main thing. The most dangerous thing that can happen to the market is this: we have a bear market, and that is just a normal bear market where people are very bullish and excited, and they buy it all the way down. Now, anybody that's never done that, raise their hand. Well, both of my hands are up, because that's how I learned this business, was back in 1974. That happened to me between July. Right around this time, it was around July 28th in 1974 till October 1974. We had the October crash of that year. That was the major bottom in the stock market when the Dow bottomed at 900. So let's try that again, Larry. The Dow bottomed at around 500. And from there, we went up, to where we are right now at 21,830 or something like that, whatever it is. So these are some pretty long-term cycles in here, but that's what happened to me during 1974. Is I learned all the things that I had done wrong. And believe me, it at the time, I believe it or not, folks, I wasn't even upset. I mean, because I didn't have nothing when I started, but I spent a lot of money on the way up, but I had a lot of money on the way up. On the way down, I didn't have any trading capital. I had some other stuff, but it really didn't mean very much to me, because I was really young and I knew I could make it back. So I never had any problem, with that. Fact is, I sold out. I got sold out on the bottom day in October 1974, because back in those days, folks, there was no NFA, there was no CFTC. The commodity houses themselves, the one that you were trading through, they had the margin. They decide what the margin was going to be, along with the CME, and you could trade at a debit balance if you wanted to do, because you could use the company's money. And I had spent so much money on commission over a 6-year period that they said, sure, go ahead and keep trading. You'll make it back. And I stopped trading it with a minus $2,700, and then about a week later, I saw a really nice pattern in pork bellies, and I bought a couple of bellies with no money in the account, minus $2,700. It started to work. 2 days later, I was plus $300. I stopped trading. I left the money in there. I didn't trade again for well over a year, and that's when I, really got involved with the Gartley patterns very, very heavily. And, started, wean my way back, which was actually just as exciting as losing the money. But I did so many stupid things on the way down, folks. That's the thing that I'm really ashamed of, is that, I kept buying, I would buy a 16-day cycle, and it would rally for 2 days, and it would go down for 14 days. And I stayed long the 14 days. I mean, that's just ridiculous, because I didn't really do money management, because from 1968 through 1974, it was a one-way Corrigan. You didn't have to do anything wrong. The market went up, it bailed you out. Much like what's happening now to some of these folks that are in some of these stocks where, they buy Google at, 1,090 and it drops to 1,015, and 3 days later, they're back to profit again. So that's a thing. Try not to do stupid things, and that's the main thing, because the tuition that we have in this business, as Duffy's pointing out here, is the thing that's very, very expensive. The entry into this business is very simple, but the money or the education that you have to get it is what's really important, and that can be very, very expensive. So remember that, like the old Chinese adage, the smart man learns from his mistake, but the wise man learns from the mistakes of others. So read the books, study the things that you need to study, and try not to make those mistakes, and you'll be just fine. You're never going to be right all the time, folks, and you're going to have periods where things don't look very good or don't work very well, but even that, you'll still pull through if you have a good plan, and you'll be able to make it to the promised land. Now, I didn't start the show with the DAX today is because I didn't have it updated. I spent too much time this weekend, working on the letter and some of these things that I'm looking at on a longer term, which we'll cover a few of these when we get back from the break. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I've posted the chart of the Dow E-mini, the 30-minute chart over the last few days. You can see the 1.27 expansion on the upside, the 1.27 expansion on the downside, and now we're doing the reciprocal of that. Now we're making the 78% retracement. However, that could easily go up and make a new high. Now the reason for that is the Dow is is pulling the rest of the market up, with Caterpillar and of course Boeing Airlines and a few others. Now, someone's asked a question about this, two things about the Bradley model and the Bradley turn date. The August 7th is a solar eclipse with a full moon, and August the 21st, 14 days later, is the solar eclipse. So it's 14 days between new moon and full moon, which we know, but the eclipse is very beautiful. 20 some years ago, when I first moved here to Tucson, we had the solar eclipse crossing right over our path here. It was really a big deal. And if you folks ever come to Tucson, Arizona and get a chance, I know a lot of you have been here to visit me. Go to Kitt Peak, and that's the big observatory at the university here, which the University of Arizona has one of the best astronomical observatories in the country, and you could see it. I mean, like you wouldn't believe it with the telescope looking at the sun. Of course, they have the filters, but you could see it so clearly. It was like you could almost reach out and touch it. But if you ever get here, go out there at night and sit under the stars, looking at these giant. You can see the giant telescopes, and you can see everything. You can see the rings of Saturn. I mean, it's really spectacular. If you want to see how insignificant we are in this world, you got to go there and look at that, because you see the stars. You can almost reach out and touch them as you look at the telescope. But it is really really unbelievable. Yes, the University of Arizona was really big in the development of the Hubble telescope, of course, and several of the astronauts have been through this area, along with Geraldo Rivera. Believe it or not, he's one of the most famous people to come out of the University of Arizona. But anyway, it's really a great thing to see if you're ever there. I mean, there's a lot of cool things here. We got some really great caves and wonderful state parks and stuff, but nothing approaches that Kitt Peak thing. That is really totally out of sight. Okay, let's move on to a couple of things that we need to take a look at. We've looked at the S&P 500. We've covered the Bitcoin. Now I want to talk about Apple, because we've got the Apple's earnings are coming out today, and of course it's always a big thing. We don't see enough. Duffy, I've only seen 3 Gila monsters in all the years that I've been here in Tucson. One was my neighbor had one in his house. He came in through the what do you call it, the chimney. Then we saw one crossing the road, which was a really big one. And then we saw another one, I think about 5 or 6 years ago up in Scottsdale, we saw one there. But if we take a look here at the Apple chart, you'll see that the Apple has been lagging the market by a bit. On this last new highs in the NASDAQ, we were only able to make a 78% retracement. We broke quite hard, a big 5% break in Apple in one day, and we've only been able to rally back to about a 38% retracement of that last rally. So with the Apple's earnings today, my assumption is that people are taking protection against whatever iPhone 8 or iPhone 26 is, and we'll find out what it's going to be doing. But anyway, that's what we're watching, whether it does that or not. But the pattern is there. It is weaker, but remember, it could really get really strong today, and that would make it a whole lot, a whole lot different as far as going from bearish to bullish. So remind yourself that these things can change on a dime sometimes, so you've got to pay, pretty close attention to them, otherwise they can get away. If we look at the IWM, and it's going to be up a little bit today too, it also has completed these major ABCD patterns, and we're going to see, what it's going to do for the rest of the week. But all of these big patterns here, we've had the 3-drive pattern, then we had another 3-drive pattern right after that. And so this is really indicative of something really big getting ready to happen in the small caps. So take a very interesting look at that. Now, folks, there's two markets today that are really setting at, it's tomorrow. Thank you very much. Apple's earnings are tomorrow. Thank you very much. I thought it was today, but you're right, it is tomorrow. And that is, August 1st. How that works is you take the 31st of July and you add 1 day to it, and you come up with August the 1st, and there you go. Okay, I have a lot of birthdays in the family here in August. We've got a whole bunch of birthdays, which is always a lot of fun, especially when you got the little ones. Okay, let's move on here. I posted the IWM. You can see here that it is... It's doing what it's supposed to be doing. All of these things are doing what they're supposed to be doing. Now let's get back to the couple of markets that are really on clue for a potential major turn. In the first one is the crude oil complex, folks. The crude oil complex has been talking about $50 a barrel for a very, very long time, and we hit that $50 a barrel level last night, early Sunday night. So whether this is going to be a big thing or not, but we hit it pretty much spot on at, I think, 50.08 was the number. We haven't gone down much. I think we're trading around 49.50 or somewhere in that ballpark. But that has completed. Also, the heating oil has completed, and also the gasoline futures have also completed. So all of them are coming in. Now, they're making a comment here in the den about the Venezuela situation in oil. I don't understand the fundamentals of it, but I'm sure, they're going to be in the market some way, to look at it. But that's the main thing, is to keep in mind that these things, they do move around on political events. And I've watched a little bit of television yesterday after the election in Venezuela. I've been to Venezuela. It's a beautiful country, but not anymore. It's been taken over, and now it's going to be pretty difficult. So we'll find out if this thing is going to be looking at it. As far as the grains, what I'm looking for in the grains is I'd like to see the move into this lunar eclipse on the 7th. That's only a week away. So a week from today, I'd like to see some more backing and filling and see some patterns completing like we had on Friday in the beans, wheat, corn, and meal. And oil and soybean oil made a perfect ABCD pattern over the weekend, right in a Friday at the 35 and change level, and now it's trading, quite a bit down from that level. So my approach here in the grains is just to wait and see, what the next level is going to be from that particular spot. So that's really what I'm watching. Now it's interesting, folks, that silver has actually made a new high from Friday. Gold made a new high by about 40 cents, but silver took it out by about 10 or 15 cents. If we can get silver above $17 an ounce in the December silver, that would be a very, very powerful thing, in my opinion. That's September silver, folks, not December silver, September silver. So that's what I would be, paying close attention to, from that perspective, because it looks very interesting, of course, just seeing it, that way, but we'll keep watching it as we go through. So we'll take a little break here, 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives.
If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Trading is different than investing, but the opportunity to take advantage of short-term trends is only one if you get the direction right. Direction leveraged and inverse ETFs offer bold trades on U.S. and international stocks and bonds. Direction leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and we've been asked to take a look at the Treasury bonds. I posted the daily chart, as you can see here, when we had the big Gartley pattern form up there at that 155 level. We had the pretty big break, and then we had a 1.5 rally. Let's just to see where we are this morning. As you can see, looking at the hourly chart, we did go down to just about that 78% level. Then we rallied up to almost exactly the 50% level, and now we've started back down again. We're already a point lower than that 50% retracement. As long as we don't get above that 50% retracement, it looks like we could be, heading down lower. This bond note charts look very, very bearish, folks. I've mentioned it several times, and I believe we're going to see 147 in the September bonds before they go off the board in 6 weeks. So we'll see if the market continues to go down into that level. I had an interesting thing happen family-wise. I get off the subject for just a little bit. My grandson is going to be 17 here on the 14th of August, and he's interested in baseball now. And the Dodgers were playing the Giants on TV in San Luis Obispo, and he was watching it with his buddies. And of course, my daughter was there, and they were teasing my daughter about what girls don't know about baseball. My daughter went out into the garage and pulled out some old things that she had kept through the years from the 1980s when she was just a teenager, and she showed she had the actual scorecards where she kept we went to so many Dodger games. We would travel with the Dodgers to San Francisco and to San Diego to watch them play, and both of my daughters kept scorecards. In other words, they knew everything, and they had all these scorecards, plus they had all the autographs, because we had so many of the Dodgers that were family friends and people that I did business with, and they had their autographs there. Well, the autographs didn't mean anything to these young boys, but the fact that they were shocked that my daughters knew so much about baseball, a lot more than they did. So it was really cool to remember those days. But anyway, we'll move off. But yeah, I happened to watch that, Mr. Bill, and when they won in the bottom of the 11th inning. We used to stay to those 11th inning games too when they played back in the 80s. It was really a lot of fun. It was really good. When my daughters played softball, two of the Dodgers came out to help us, teach them some of the rules and stuff, which was fun. We had Ron Say, who was the third baseman for the Dodgers, and then we had Steve Garvey, who also he lived right down the street from there. Another thing was the Hall of Fame pitcher Don Sutton. Actually, we taught them to use the when he became an ABC sports broadcaster. The ex-wife taught him how to do the thing with the computer. We didn't. It was just away from the typewriter. So it was one of the first things where they did. What do they call that when you do the having a little slippage of the old gray matter here? But this was a long time ago. But it was a lot of fun. Anyway, let's get back to these markets, folks. We've got a lot of things happening regarding the gold and regarding the silver. If the gold if Christmas gold, December gold, and that's the spot gold right now, folks. For many, many years, October followed August, but not anymore. October is a maverick month, just like November. They basically don't trade those, but December is where the action is. So you've got to be trading December gold right now, and pretty soon you'll be trading you'll go into December crude oil. But crude oil is different because all of the crude oil contracts have huge volumes, so it doesn't really make a whole lot of difference. But with the gold, you really need to get in December. Just like if you're trading beans, you want to be trading November because that's the main thing. But August beans, of course, are the old crop beans, and you could still trading those. They're all being affected by the break in the weather right now. So, and that can change in a heartbeat also. So watch it. But the two markets to watch really closely today, of course, are the gold and the crude oil complex. Those are the ones that are setting right up here at Fibonacci resistance and major Fibonacci resistance, along with the pattern. So these are the ones that you want to sort of keep an eye on. As far as the euro, we've been up in this area of 117.40 for a very long time. We're still there, and it looks like we're getting ready to try to attempt it one more time. But from that level, we'll see whether it's going to really have a big move or not. Someone's asked my question about my letter this week on the fact that I'm just a tad bearish on the stock market. Folks, I don't want to influence my bearishness on you because you're the ones that have to make the decision on your positions and stuff. But the way I see all these things, I mean, my goodness, I haven't seen it lined up like this since a very, very long time. Now, remember, I tried that VIX index in January. It didn't go anywhere. The one in June did pretty well, but the one in January didn't go well, and I really thought that was going to really a big one. So I'm wrong a lot. So you got to remember that, and of course I'm right once in a while. But that you have to be right once in a while, or you got to go on and do something else. But watch this market because we're coming into some really heavy stuff into this August period, and it lines up so nicely with the Bradley model. And remember, the Bradley model is certainly not perfect, but for longer term periods, that's one of its specialties. And also the trading date. So the trading date, comes in between the 5th and the 7th. And then we have nothing happening. You see nothing happening on August the 21st for Bradley. It just that's the big eclipse. And I frankly, I don't see eclipses as turning dates too often, but they do happen. It happened in '87, of course, because we came into a lunar eclipse on the 28th of September of that year, and then we rallied into the next full moon, which was a new moon, I believe, on the 7th of October. And from the 7th of October to the 19th of October, the Dow lost 40% of its value. That was the crash of 1987. We're set up to even lose more than that this year, folks, with all these ETFs and all these high-frequency trading, because they're not going to be able to take all the volume if people decide to start selling. It's just not going to be able to do it. There's just not going to be buyers on the way down, because most of this stuff went up on very light volume, and believe me, when it comes down, it's not going to be on light volume. So just remember, protect yourself in here, because I think it's going to be a very interesting time frame to look at some of these particular things that we're looking at. Is the solar eclipse more powerful than the lunar eclipse? Yes, that's supposed to be true, Marshall. But for trading purposes, I don't know if it means a whole lot of difference. When we did the first book, Astrocycles: A Trader's Viewpoint, Twentyman and I looked at that thing really closely, and we couldn't get the really good turning dates with eclipses. Remember, eclipses are lunar. The solar eclipse is new moon, lunar eclipse is a full moon. So those work just by that. But as far as being extra powerful, we didn't see that. However, when you see these where you have the super full moons, where you have the perigee or apogee coming at the same time, then those are very, very powerful. Norm Winsky's pointed that out to us several times, and those are the ones. You ought to get Norm's letter this week, folks. If you haven't seen it before, take a look at it. It's only 42 pages. I mean, give me a break. I mean, it's like having a textbook. He's got some great information in there. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Basil Chapman will be giving a 2-series webinar Wednesday, August 22nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018? Each time the market feels it's ready to have a sharp decline, formerly weak sectors rally to hold the market up. This 2-webinar series will be free for Basil's opening call subscribers, and non-subscribers will also receive his daily newsletter for 1 month free as a trial subscription. Sign up for a 30-day free trial to Basil's daily newsletter, The Opening Call, and gain access to his subscriber-only webinar on August 2nd and Wednesday, August 16th from 5 to 6:30 p.m. Can sector rotation buoy the market into 2018?
Hi everyone, this is Basil Chapman, and I'm looking forward to seeing you at my webinar series.
To sign up for a 30-day free trial to Basil's daily newsletter and gain access to Basil's webinar, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look here at the wheat market, because you notice here that we stopped at the 61% retracement. Of course, we gapped down last night by about 12 to 13 cents. That tells us we're going to go down at least to the 78% level, and that comes in down around 25 cents from last night's close. And we'll see if that's going to hold or not. But right now, the weather is in control. Oh, we got a caller in from Philadelphia. John, are you there?
I am, Larry. Thanks for taking the call, and good morning to you.
Good morning. What can I help you with?
You've very kindly put up the wheat futures. That's my interest. Just wanted to share the observation. Larry, on the wheat, I'm actually probing for a bottom right in here after this decline off July 5th. Do you ever take a look at the the daily nearest futures, in addition to looking at, say, a distant contract like that December Chicago wheat that you put up here on Tiger TV?
I do somewhat, but actually my good friend Jim Twentyman does that for me. You know, Jim's a master of data, and so this goes back, you know, our 50-year association. You know, we bought computers together, and you know, he was the master of doing this. I didn't mind paying for it because, you know, I benefited from it. So I let Jim do that for me, but he does do the continuation charts along with the nearest futures and stuff. But there can be a difference at times, John, as you're well aware, and you have to be really, you know, cognizant of that. But what I basically do is I, you know, basically look at the lead month. You know, like right now is November beans and Christmas corn, Christmas wheat. So those are the ones that I'm watching, because that's what I'm trading. I can see that really clearly. Now, if I need to go a little deeper, then I'll ask Jim to let me see a continuation chart. And what you're looking at here is where one of those times where you want to see the continuation chart, because you could see a totally different pattern than what the near futures are telling you.
Right, and it's not so much. I'll just share just an observation. Oops, gotta go.
Oh, hey, thanks for calling in, John. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.